In today's video, I'm going to teach you QuickBooks Online, how to record a loan payment. If you've made a loan payment and want to record it correctly in QuickBooks Online, this is an important process to understand. A loan payment usually includes at least two parts: the principal, which reduces the balance of the loan itself, and the interest, which is a business expense. Recording both parts properly helps keep your books accurate and makes your financial reports much more reliable. To get started, go to the top left of QuickBooks Online and click the plus button. This is where you can quickly create new transactions. From there, select Expense. In some cases, you may see the option to use either a check or an expense form. Choose Check or Expense, depending on how you made the payment and how you prefer to enter it in your books. The goal here is simply to create the transaction using the correct payment method. Next, choose the account the money is coming from. This should be the bank account or other payment account that was actually used to make the loan payment. Selecting the correct account is important because it ensures the transaction matches the money leaving that account and keeps your records consistent. Now move down to the Category Details section, because this is where you'll split the payment into its proper parts. On the first line, select your liability account, which is the loan account, from the category drop-down. Then enter the principal portion of the payment. This part reduces what you owe on the loan, so it should not be recorded as an expense. On the second line, select your expense account for interest. Then enter the interest amount. This is the cost of borrowing the money, so it belongs in an expense account rather than the liability account. Separating principal and interest like this is the key to making sure your balance sheet and profit and loss report stay accurate. Once everything looks correct, click Save and Close. That will record the loan payment in QuickBooks Online. As a final tip, make sure the total of the principal and interest equals the full payment amount before saving. If your lender provides a payment breakdown, it's always a good idea to use that information so your entry matches your loan records exactly. When entered this way, your loan balance will decrease properly and your interest expense will be tracked correctly.